Hey friends, this is Martin from Seekers, the channel for learning about trading and investing. Welcome to daily stock market analysis show, where we look at what happened in the market and how we can plan for the next trading day. And remember, this is for April 8th, Friday, tomorrow, 2022. So the market continued for retracement today. That's exactly what happened, right? And another day of retracement. So let's get into and see what we can understand from the charts and the technical analysis. So it will be based, the pre-market analysis would be based on all these parameters that you see. You have data analysis also in addition, all parameters that you see on the right side. Then we'll wrap up some actionables. We'll also look at global markets and commodities and all that, right? So get into the charts. This third day of retracement, but still at a very good support, right? And Nifty is more strong. It just formed a inverted hammer actually, and that is a sign of a trend reversal. Probably this downtrend, small downtrend that has come, maybe getting reversed to the uptrend from tomorrow. Never know. There is also a change in polarity chance because it's at a previous resistance, so we can bounce it from here, right? Wherever this previous resistance acts as support, you could expect a change in polarity. That's there in the both indices. That's what it is, right? Bearish candle clearly visible on Nifty, and there is a green candle that's inverted hammer that's there in the BANKNIFTY. BANKNIFTY showed more strength today. Don't be true as an expiry day, so it would have its own nuances, as we know, right? So this is another view of that. So it's remember it's a channel breakout. There is also a flag breakout that's happening on both indices, right? You can the flag pattern is clearly marked. The channels are there. It went big moves happened in the last 2 days and then gap down for the second day, right? But BANKNIFTY pulled back. Nifty could not pull back. But remember that it's still within the gap support. Still the Fibonacci 61 is still maintained, and all the moving averages 200, 50, 100, everything is still intact down there as good supports, right? And BANKNIFTY, the 61 level retracement has given up, but it still got the gap support that it had cleared earlier, and that could act as support, and all the moving average resistance that was earlier that can be a support right now. So still okay, right? All the bands are expanded, right? But there is some bend that is happening on the top. It indicates a small pause in the expansion, right? So expansion indicates bullishness, and the distance from the median on both indices also indicates bullishness, but the distance is higher, it's more, so that's why we see the volatility. Today also we had a heavy intraday volatility. Look at this, intraday charts are saying that it was a gap down and then range bound, but between 150 points in Nifty and 500 points roughly on the BANKNIFTY, both gap down. And then, but look at the shape in the range bound of 150 points or 500 points. You can see that it was volatile. It's a V shape down move and up, V down, other part V up, then inverted V, inverted V. So that's the kind of volatility that you face today. So that's exactly what it is. It's a summarize. So 168 points lost in Nifty, nearly 1% lost again, bearish candle form. So, but all support levels of moving averages for 961 gap support, everything is intact. Our support downside price action is a trend line breakout and a flag breakout. BANKNIFTY only 75 points lost, 0.20%, right? Down from the previous day. That's all. It's down, and Fibonacci was low yesterday, but all the support levels of moving averages is intact. Trend line breakout is also, it is actually settled back on top of the trend line from where it blocked out. Flag breakout is also is what had happened in BANKNIFTY also, right? Intraday V-shape moves are there. It was range bound, but within 150 and 500 point respectively for the Nifty and the BANKNIFTY. So potential change in polarity, as we said, can be possible, right? Because the bands expanded, but there is some bend on the top, which indicates a pause in the price up move. But overall price up move is what it indicates, with a higher, with a volatility expansion on the higher band and above 20 MA median of the Bollinger Bands, right? But volatility could be there, big. That's what we see. That's what the Bollinger Bands are indicating. So intraday price action, Bollinger Bands, we are seeing support resistance levels. Right now it's at a support 7500 to 7600 Fibonacci 23 retracement level. That's the support there. That's broken and goes to 7350, 7400. That's broken. You have the gap area which is coming at 17,000, right? And in between also we have a previous resistance which can be support now at 17,200, 17,300. That's not. Upside resistance would be 17,800, 850 now, and then about 18,000 retrieving that back, and then 18,100, 200 and 400 likewise on the upside resistances. And Nifty is it's at a support zone of 37,000 nearby range. Right? That's the first support that we get after if it breaks the 37,500, 37,300 levels, no, which is Fibonacci 23. If that breaks, then the support would be seen at near to 37,000. Then 36,800 Fibonacci 38, and then 36,000 nearby levels, and then 35,000 nearby levels, which is Fibonacci 50 retracement. That supports on the downside resistances would be first to clear 75, to retrieve back 75,500 is what the main thing is, and then the 37,800 would be the major resistance upside, and 38,000, and above that it will be 38,500 and 39,000 above that. These are the resistance on the upside, making all of the support resistance. Momentum divergences, I can see that momentum is more or less bullish, still bullish you can say, although it has slipped slightly on the sideways. In short term Nifty and Bank Nifty is bullish. Small slip in the sideways is there, but you don't have to be that precise on the numbers, no, when it comes to the RSI levels, right? Still bullishness is there. There's some kind of range shift from the sideways to the bullishness has happened. Hope it takes a support somewhere here and then bounce up from here, then it's okay. But if it slips back in the sideways, then we have a problem, right? So that's where short term and the medium term it is sideways only in Bank Nifty and Nifty. The momentum has not turned bullish on the medium term yet. Trend indicators are showing that it's bullishness. DMI and ADX indicator is saying DMI positive as well. Short term and medium term both on both the indices, right? That means it's bullish, right? But short term has got strength, medium term it's just catching up the strength, weak strength, that's all. But trends remains to have changed in the bullish zone. There's no change that has happened because of the last 3 days of more. Momentum has dipped a little bit, right? But still nearby bullishness in the short term at least. Volatility 18.9 flat. No, yesterday it was 19, today is 8.99 or something, right? So implied volatility of the Nifty is 18.22. IVP has cooled off to 70% from the 90 plus levels, right? So still the volatility is very close by near to the 20s. We have to be cautious in case it spikes back, right? Uncertainties are still around. Open this data may not be very much relevant because it's for the next week, which April 13, 2022. Today is an expiry day, so data actually trading may be happening from the next week for this weekly expiry. But still, for reference sake, we're just mentioning that 7,800 and 19,000. 19,000, it's too far, right? Probably there may not be that much relevant, so that's where the levels are. Highest put and call writing, and then 17,000 and 18,500 for the second level of support and resistance. Puts and call writing is seen more on those levels. The second put coverage is 0.52 is not bullish at all. It's closer to bearishness actually. Short build up is what happened in the Nifty. Bank Nifty, if you see 37,500 and 38,000 is the first level where the highest put and writing and call writing is seen. 36,000 and 41,000, that's where the second highest amount of put and call writing is put. Support and resistance can be looked at these places, right? Put call ratio is more bullish than Nifty, 0.71, and long build is what happened actually as per the futures open interest data on the Bank Nifty as compared to the short build up that happened in the Nifty, right? So that's a small overview on the open interest data for the weekly expiry that's going to get accumulated from tomorrow. The heat map is showing that this is red mostly. ICICI Bank did well, and Indices did well, and Axis Bank did well. But otherwise, it was a red day, and HDFC has no sell off a profit booking, whatever it is happening since. Reliance also did not do well. IT also did not do well. So all major sectors did not do well. Only pharma did well, and some smaller sectors, right? So all major sectors did not do well. That's what markets. So that's exactly what happened. Right? Index HDFC, had done the mega breakout and hit the resistance zone, and then the sell-off happened for the last 3 days. Hope it takes support here and then, maintains the momentum. So these are the culprits that is bringing the markets down. Right? If I said all 2,700 kind of crores yesterday, the cash market, that must be mostly HDFC's profit booking. Maybe what is happening, right? HDFC also the same. Right, it had, but you can see that the momentum is still not fully died out. So there is every chance that it can bounce and move back to the place where it came from easily, even now, right? But you never know. Even some bearishness can be in the reliance also. It is also slightly slipping to sideways, but still not very close to the bullish zones. In no momentum, just to the momentum, but price pattern is a breakout from the cup and L fan bone. So it may be consolidating before making next move. Infosys has dipped close to it again. So remember, it is very closer to it fell down to on gave it to the resistance. It's very close to the all-time high levels probably. Order is slipped to the sideways now, clear for Infosys. And TZ, as if you see, it's a red candle another day. It was giving a feeling that it was climbing up in the parallel channel, but looks like it's facing selling pressure and dipping back to the edge of the channel, right? No, it had done a very good bounce from the support zone, so right. However, slipped to the sideways just like Infosys. ICICI Bank's run one, it has seems to have climbed almost there in the bullish zones, and the support zone seems to have this resistance zone seems to be a support zone now. No? Seems there is a green close above that resistance now. No, seems like it has climbed successfully. That momentum is almost near to the bullish zones. You can say, no, overall looks fine. It did perform well today also. But Kodak Bank style trend is in and resisting below the RSI bullish zones. Looks like the bounce up that happened few days back is not. It's fine. It's difficult to sustain that. That's right. But overall, there is it's very close to a major resistance zone, which it is never going to give up that easy. No, it has never done that since several months now. Yeah, bottom sideways with Kodak Bank. So HCC Bank doing okay, good. Right. Otherwise, there's nothing much that did well today in the index heavyweights. Sectoral performance. Actually, it's the old one. We will have to go and look at the charts directly because that data missed to get updated. Let's go in directly and see what happened today. So it is a down day. That's like 1.2% down. Momentum is sideways in the IT sector. Metal sector is still bullish, right? But today was a down day of 1.6%. But medium and short term is still bullish. So no worries and long positions can be taken. But only sector where it is bullish. Auto was facing resistance at the previous resistance zone and it is flipped after climbing the bullish zone. It is slipped back to the sideways zones. We'll have to watch it closely whether it's continued to hover in the sideways zone or will climb back soon or not, right? It was a down day, nearly 0.8%, 1% down day. Pharma did well, inverted hammer there. It is comfortably settled in the above the average of the RSI and above the bullish zone. So pharma is bullish. Probably long bets can be done, but remember that the weekly candle is not having momentum bullish, so you have to be cautious. FMCG is a flat day, kind of inverted hammer is there, but it's in the bullish zones and maintains that. Realty also in the bullish zones and maintains that, but a flat day, right? So flat day for realty, FMCG, good day, like 0.5% of up move in pharma remains bullish. So all these three, pharma, FMCG and realty is maintaining the bullishness, right? Auto is auto, IT and metal is down day, but IT and auto is sideways, but metal maintains the momentum in the bullish zones itself. That's a wrap up. So that's exactly what happened. The FI data has not come in, but yesterday we had. Let's quickly check whether the data has come. No, it does not come. Yesterday we had 2,000 crores of selling the cash that happened in by the FIs who we thought had turned into buying mode again, but that is not true. And domestic is also about really less. Today definitely FIs might have sold really big amount, and domestic also might have sold is what it looks like. So that is still not out. You'll have to wait and check that later. But institutional support is not that. Probably there is RBI even policy even there tomorrow. So it's waiting for a trigger before it can move to the next continuation of the rally, right? So USD INR, if you see, it is not good news. The rupee has weakened further, climbed back to near to the 76 levels. Momentum is seen rising, but still in the sideways. Right. So it had cooled off substantially up from the 77 levels to the 75 below levels, and now it seems to be climbing back from the support zone, right? Not good for the economy. So more things will be clear how this will, USD/INR will react probably after tomorrow's policy outcome. US dollar current has hit the multi-year high resistance zone of 99.6, and seems like it's consolidating a little bit there. Yesterday it hit that momentum is in the bullish zone, so every chance is there to have the dollar index to go further high up. Again, dollar strengthening is not that great for our economy, our currency basically. Um, Global indices, if you see Dow Jones also seems to be falling back to the support zone from where it had shot up and moved substantially up. So the momentum has slipped back in the sideways zones, not good. So Nasdaq also similar behavior, momentum slipped to the sideways, and bearish candle formations are seen. Bearish candle also seen in the S&P 500 also. So that big up move from the support zones, and especially the Dow Jones, the climbing back into the channel from the from the low that happened seems to be not enough to further take it up side. So you have to be cautious, because there is some dependency on US markets and our market. So if that is not able to sustain at the levels and the momentum, then it would definitely have. So you have to be cautious basically. You have to keep a close watch of this in the pre-market tomorrow. Crude oil had cooled up a little bit, and now we can happily see that it is below the 97, kind of near the 98 levels. That is good news. It's at least it's gone down below the 100. Right, momentum is still sideways, so probably it may be consolidating, or could be moving down till momentum reaches support somewhere here. So that is only good news, that the crude has cooled off a little bit. Gold seems to be again not ready to fall down from where it came from, and still waiting for the opportunity to climb back. It's consolidating this red support zone after breaking off from and making a failed breakout earlier a few weeks back. That's about gold. And the actionables too are the Vauld seems to be rounding back and breakout on the weekly, but the entry has made on not on weekly, has been made on a low time frame charts, and this seems to be some consolidation that has happened at the rounding pattern after the rounding pattern breakout, and now it is again what they're moving up, and the candle size of this week seems to be very bullish. The momentum is in the bullish zones, even on the medium term. The trend is clearly on the medium term also bullish, and volumes are also very good, above average. ICICI Bank seems to have closed with a solid green. This is a daily candle, and the momentum is almost at the bullish zones, and it seems to be trending within a small channel, and it is comfortably sitting above the major resistance zone after having moved substantially from the down, and then probably there may be a good move that can happen up till the next resistance it's seen, right, from where it had fallen off, right. So it may be slow, but it's moving. The volumes are good, the momentum is good, trend is good, and price pattern, support resistance levels also looks nice. But probably the entry should only be made after the price moves above the previous candle's high, right. So two actionables, right, for the electronics and ICICI. The signals may come in next day or the next day, never know, right. But yeah, wrap-up is cautious bullishness. Even though we had a third day of retracement has happened, bullishness is still there, considering that the change in volatility, the chart patterns, support resistance, rising momentum, rising trend crossover, bond in the band expansion. There's 15-20% of market up recovery from 3 weeks of time. All this, and very good support levels of the moving average all around down below, right. So it's clear, all so that's all very positive. Banks are showing very strength today. Only thing is FS again going back to the selling mode after a few days of small buying that happened, right. So in the cooled off a little bit, but even 98 kind of levels is not that great, right? Dollar is strengthening and rupee is weakening. Global cues are not that great with regard to the war and uncertainty. So volatility we saw that can spike back from about the 20 plus anytime, right. So very be cautious on that. If 17,500 is maintained tomorrow and 37,500 also, these two levels, and the moving average is not broken, then we should be okay. We may be consolidating before making the first move. So as long as that happens, it's fine. But if that is broken, then you have a worry again. Now we have the worry of if that is going to make another lower high, right. Remember that the price has moved up, so you can see that here clearly. Right, so let me just go back to that chart here. See, this is where the previous swing high is there, right? Now you had the second lower high. It can be a second lower high. See, Bank Nifty also here, right? 39,000 nearby range, right? This can be the second lower high if that is going to go down. So if it is a small retracement that starts somewhere tomorrow and then climbs back, then it should be okay. It can easily take out the previous swing high. But if that is not the case, then we have a problem. So it's very cautious stage. That's why the cautious bullishness is coming. But still can't help but being bullish because momentum crossover. A lot of positive things and up move has happened. But you have to be really cautious. Considering that if I said there is an event also, RBI policy outcome could create possibility if it is, depending on how the outcome is. The market may react to that differently. There may be panic that may come. So now you have to be really cautious on tomorrow. Positive factor is that we spoke about 15-20% of up movers happen in Nifty and Bank Nifty, and VIX is cooled off and still below 20. So all positive factors, right? Market has strength. The thing is there is uncertainty. There is not fully worked out. The global economic Fed tapering and all this kind of news also is there. That impacts to the emerging markets like ours still cannot be ruled out, right? So we cannot be blindly bullish. Right? We are dependent on other economies, other commodities, many other dependencies. So you have to be cautious at this level. There's no blind bull rally that's happening right now. Although we may be in a bull market on a long term. So option setups and always has stop loss is the only thing that it is there in your hand. Risk management and setting stop losses means stop loss is nothing but risk management. So because overnight you don't know it's a big gap down or gap up, you never know that, right? What events could happen and news can get triggered in the overnight. So always that does not mean that you can't take. You have to take positions which are based on support resistance levels, and then risk is clearly defined. There has to be a view for you to take the positions, reasoning, and stick to that, and then be ready to execute stop loss if it goes wrong, right? So that way you know how much you're going to max loss. So position size it according to your risk appetite, right? And the capital size, of course. So always go for counter spreads, vertical spreads, or non-directional strategies, or whatever the options, right? That fits in based on your view on the market, right? And intraday, volatility still there today. Day before yesterday also we had multiple V-shaped moves that happened intraday. So even if the VIX has fallen down below 20, we have high volatility that is seen, right? So cautiously bullish. That's my view. So if that helps you to frame your view and on the market tomorrow and your trading plan, and if it helps to frame that, then consider hitting the like button and share it to maximum. We have very few options, so I appreciate your help in this regard. Thanks a lot for watching. Happy trading, happy learning. Bye.